This is the Friday, November 6th, 2015 version of the Market Plus segment. Joining us now is Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
We've been on a bear warpath here on the program, and we'll just keep it going. I want to talk about the cotton market. Down $1.66 this week. This thing's just been range-bound for quite a while. Where do you see us going short term?
Well, the Chinese control like 75% of the cotton in the world, so that's where the problem is. I think I don't want to get bearish cotton down here. I think there's probably upside potential, but you get up in that 64.50, 65 area, then I think you'd have to be a seller of cotton up in that, which is a pretty nice little rebound from these levels. I think it'll be hard to get beyond that. There's an expectation that cotton acres are going to be down next year because profitability there is just not very good, which is going to feed into either probably more corn or more bean acres. So that's something to kind of keep in your mind when you're thinking about next year's.
Well, and let's talk about that. If cotton profitability isn't great, is corn and soybean profitability that much better for a lot of these cotton producers?
Apparently, because everything I read says that they're switching away from cotton, so they must think whatever they're going to is going to be better than that is.
Okay.
I mean, I'm not up on all the economics of the three crops in that part of the country, but from what I read, that would be the conclusion I would get, I guess.
Willing to go ahead and make that change.
Right.
Now, as we're talking about acreage for 16, we've got a question here from Brock in Baxter, Iowa on Twitter, and this is from @HansenAg. He notes that record yields in corn and beans for the 15 crop. How does that affect planting intentions for 16? And he wonders, will we see 60-40 corn beans in central Iowa?
Here's my take on that. Historically, for corn and beans to sort of be in balance, that bean-corn ratio runs 2.4 to 2.5. Well, right now we're running 2.18 to 2.2, which heavily favors corn. So my expectation is that you're going to see more corn planted relative to beans. Now, I get the argument fairly frequently that bean yields were good, it's cheaper to put beans in, so therefore bean acres are going to hang in there. And my counter argument to that is most of the people that had those fabulous bean yields tell me it's probably a once in a lifetime. It's not something you plug into your cash flow for every year for your beans. Plus, most of the people that had good bean yields at least had fairly good corn yields. And so I guess I'm thinking that there's probably going to be a slight shift in an increase in corn acres next year.
Informa's number was 90 million, a little over in corn acres, and beans down a little bit, 83 something million. That seems to ring pretty accurate.
I think the trend's going to be that way, yeah.
Okay, now if we get those planted acres, and we're all hyped up on the weather, El Nino, of course, in effect, going to bring some moisture, could transition to a La Nina. What happens if we get average weather next year? APH crops in the Corn Belt, where do you see prices for fall of 16?
Well, December corn of 16 is trading around $4. I don't see any reason why you wouldn't see that drift down toward $3.50 again.
Okay.
Kind of with the lows that we put in the 2015 crop. And certainly if you get up in the 4.25 plus area, I would start making some sales for that 16 crop. That's a little early, and for me to get excited about selling it at 4 quite yet. But certainly 4.25 would be a place I'd be starting on getting some sales made.
And for producers looking at selling out through December of next year, do you like straight future sales or an options position with the time value? How do you make that determination?
Well, I'm kind of an option guy, but if you look at a 420 probably put at that point is going to cost you 25 cents. Well, that could be your margin. So as far as I'm concerned, if I could get a rally up that high and could just get it flat out sold, I'd sell it. Now, if at some point you want to buy yourself a serial call to protect against some catastrophe in the summer, then okay, do that. But generally speaking, I would just get a sale made.
Just get it sold.
And then if the basis is decent, make it a cash sale instead of a futures.
Take
you'd
the
have to
margin
make
risk
that decision.
out.
Yeah.
Okay. Soybean side, where do you see bean prices potentially?
I think beans, new crop beans, certainly you get them above 9. For sure, if you get up around 940, I'd
Okay.
start making new crop sales.
Start dribbling them out at
Yeah.
9 and hopefully ride it
how
up.
that shapes up is probably going to depend on how the weather goes in South America as we go through the winter here.
What are we hearing right now? It was dry for a while. Now rains are kind of starting. Are we less worried about South American weather
We're
today?
not worried at all at this point. They held off for a while, like you said, because it was dry. It started to rain. The forecast for the next 10 days is moderate temperature and rain. So, I mean, it's a long season, and the 10 days isn't the total answer, but they're off to a good start. They've got everything planted. Not everything planted, I'm sorry, but what they wanted to get planted so far they have.
Okay.
So, there hasn't been a concern yet.
Gotcha. So that's another headwind on that soybean
But we're
market.
like in early April comparable. I mean, there's a lot of water to go under the bridge here.
You bet. Now, we've got a question here from Chris in Wisconsin. And Chris is wondering, we talk a lot in the futures commentary business about cycles, cycles. And he's saying most major commodity markets have cycles between lows and highs. Do you have an opinion as to how long this cycle low will last in the grain markets?
Well, number one, my favorite cycle is the one I ride on the bicycle ride across Iowa. So that's what kind of gives you some hint of what I think about cycles. But and I recognize that they exist. I just don't know how to trade them, because if you're off by 6 months or a year on your cycle, that's a long time to be wrong in the market. So I think we're going to be in a down cycle for a couple years here.
Okay.
And I'm not going to predict where that cycle bottom is, but I think, barring some major weather problem, we're going to be trending down for a year or two here, exacerbated by this dollar issue that I talked about at the beginning of the show.
Now, talking of the dollar issue, and as we're watching our exports, one of the hot topics this entire growing season, and particularly in the spring, was sorghum plantings. We saw record, huge, way over the record sorghum plantings.
Right.
All of it was going to go to China. They need it because they're not buying corn. Where does that sit today?
Well, you know, China's got this 150 million metric ton of corn stocks that they're trying to get, and that they can't get anybody to bid on. Now they've cut off sorghum imports. They've cut off DDG imports. So you got all this sorghum raised, and the DDGs are being produced by a fairly solid ethanol industry, feeding back in as another feed source for the U.S. So to me, that's another negative on these grain markets.
And is that would we feel that in the futures, or is that going to be mainly a localized basis issue in heavy livestock feeding areas?
It'll be primarily an issue on the cash side.
Okay.
But it can't help but dribble into the futures to some extent.
Now, on the program, we talked about beans down, down, down. We saw soybean meal come under 300 for the first time in quite a little while. We've got DDGs very cheap. Is this a point to be locking in some of those meal or DDG pricing?
You know, I indicated on the show that we're probably, you don't want to get in a big toot getting super bearish here. And I think that's one of the things you do is you can make cash sales on corn and beans and re-own them on the futures at these levels. Or if you're a livestock producer needing to get some feed covered, probably not a bad spot to start kind of easing your way into that. Yeah.
Okay. All right. Now, before we let you go, Tom, we've talked a lot about crude oil over the past little while, up and down and up and down. Where do you see this crude market headed short term?
Short term, I think we're going to see a little correction back into the low 40s. I don't see it going much below that. You know, the rig counts are down. U.S. production's solid. I mean, our inventory is what, 100 million barrels above the 5-year average. I mean, we've got a lot of product sitting around, but we're starting to kind of work through it. The production fracking is, a lot of those wells have been shut down, waiting to see what happens here. So I guess I think we're going to be well supported in the low 40s. Upside potential is probably not all that great either until we get sort of worked through all that.
50s, mid 50s,
Right,
see a $10 range maybe.
Yeah.
All right. Well, Tom, thank you so much for joining us this
Okay.
week.
Thanks, Mike.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.